Ben, the technology sector has rebounded strongly this year. What's driven that?
Year-to-date performance in tech has been pleasing as a result of a number of factors. Obviously, we're coming off the back of a difficult couple of years, post-COVID excitement and the unwind of some of that, and I think, frankly, we overshot to the downside, both in terms of valuations for the sector, where a number of companies got very attractively priced towards the beginning of the year, but also fear around the likely progress of technology revenues and earnings. And there too, I think investors have been positively surprised by how well technology fundamentals have held up. I think it's also fair to point out that the macro environment has also been less worrisome than perhaps we feared earlier in the year, and we've had the Fed message that perhaps the worst of or the largest part of the rate hikes that we anticipated are behind us. So the combination of a more benign macro environment, better than expected technology fundamentals, perhaps an overshoot in investor positioning, and I have to mention, of course, the arrival of AI.
Okay, well, let's come back to that. But in terms of performance of the technology trust that you manage, how would you evaluate that so far this year?
Well, so far this year, the trust has delivered strong absolute returns, and we're obviously really happy about that. And I think ultimately reflects improved fundamentals at a number of our companies, and also sort of progress being made in a number of key themes. Relative to the index, we're a little bit behind, not an enormous amount. I think it's worth just pointing out at this stage that the concentration within the index is the largest problem, if you like, from a relative performance perspective. And by concentration, I'm really calling out a handful of stocks that some of the best known technology companies in the world, the Apples and Microsofts, that combined account for more than 30% of our index exposure. Now, they're both holdings that we've held for years, if not decades, within the trust, but they aren't and won't be as big as they are in the index, because in the end, we're trying to build diversified portfolios that give our shareholders access and exposure to the most important themes within tech. And so the very marked outperformance of mega caps so far this year has been obviously a headwind for our performance. But given where we are positioned and our lack of desire in having more exposure to those 2 or 3 holdings, we're pretty happy with the performance we've delivered. And when we look across our peer group, I think we're pretty happy with that too.
Okay, now you mentioned artificial intelligence earlier. We can't not mention it. It's been in the press a fair bit. How much of this is hype versus reality?
Well, I've been doing technology for more than 25 years, and I've seen a lot of themes come and go. Some never quite make it. Many of them fizzle out, and this doesn't feel like one of those themes. This feels as meaningful to us as tech investors and to the wider world as the commercialization of the internet felt. Almost as exciting as cloud computing and smartphones, and how those technologies not only changed the landscape for tech investing, but they are very much general purpose technologies around which everything else is reimagined. And artificial intelligence feels very much like that to us. Now, again, the risk is that with all of these wonderful technologies comes a hype cycle and a narrative that the fundamentals can't necessarily deliver on the same timeline as the excitement. And that's something that we're alive to, but it's not going to deter us from investing in what feels like a very important moment for the technology sector. So over a short time frame, it's possible that there's more hype than reality, but over a medium-term time frame, the advances that we've seen in generative AI, as it's known, transformer models, the ability to ask a question to a computer and get back a human-like response across an infinite category of questions and subject matter is mind-boggling. And so I can't express in really any greater terms how excited we are about the theme, but given that we've got experience of investing in tech for a long time, we're also mindful of that potential disconnect, and particularly around the timeline for adoption.
Okay, so given that conviction, have you made many changes to the portfolio?
Well, fortunately, artificial intelligence has been a theme that we've been excited about for years, and so it's been one of our core themes within the portfolio anyway. We didn't know when AI was going to make it from, the lab, if you like, into the mainstream. It feels like that happened. And so as a result, we've been adding to existing names, particularly within the semiconductor arena, because in the main, in the first part, I should say, it's all about data, and it's about storing data and analyzing data and training computers to be able to make neural links, essentially, like we do as human beings, in order to be able to understand, contextualize, and then give us responses. That requires a lot of compute power. That means more chips. So we've been adding to chip companies. We've also been adding to cloud companies, because for most people, accessing AI will be done in the same way that lots of other cloud services are, via the likes of Microsoft and Amazon.
Okay, now you mentioned that technology themes come and go. There's a lot of hype at times. Last year we talked a lot about the metaverse. Where are we now in terms of the metaverse? Is it investable? What's the outlook for it?
Well, I think a year ago we would have said that the long-term opportunity related to the metaverse or some sort of virtual reality to the real world that we all live in was enormous. I mean, in the end, if humans are to spend all of their time in some virtual domain, then almost everything is up for grabs from an investment perspective. But we hopefully reminded investors that it's very, very early. It felt to us a bit like the internet felt before the World Wide Web had been invented. So when we get excited about themes but they're very early, we kind of keep a watching brief and make sure that we haven't missed a critical inflection point. As it happens, for the last year or so, Meta, Facebook, changed its name to Meta because of the metaverse opportunity, has been somewhat backpedaling actually on the timeline, I think, to metaverse adoption. So I think we've got time still. It still feels very early, but Apple very recently just released a headset, which is its first, its opening shot into a world where the long-term potential is undeniable, but the timeline remains highly uncertain.
We're at the midpoint of the year. We talked about the strong year so far. What's the outlook from here for the sector?
Despite a strong start to the year, we remain relatively constructive about the outlook for 2023. We're hopeful that worst case scenarios, the macro backdrop remain more benign than feared. Inflation seems to be coming down in most markets as economies slow. It feels like the monetary policy tightening is largely complete in markets where that matters. We're even in China beginning to see real signs of stimulus happening there. So it doesn't feel like our interests as shareholders are quite as malaligned as they were relative to policymakers as they did earlier in the year. But of course risks remain, and we're not overly sanguine about that. We're kind of watching the market, watching the macro. As it relates to tech, I think it's difficult to not be upbeat when a major technology appears to have just crossed an important inflection point. And so we expect to see continued momentum around the AI theme. We hope that in other areas like electric vehicles, for example, where key penetration levels have been reached, we expect growth there to be fairly robust, regardless of the overall macro condition. But around the edges, you should expect to see some softness, because in the end, the monetary tightening that we've seen is designed to try and slow the economy, to try to bring down prices. And so we're being careful about where we have exposure, at the margin reducing some of our more cyclical exposure within portfolios and trying to focus on the most important secular themes and how to best get exposure to them.